Hello, welcome to HBL Market Insights. The Monetary Policy Committee of the State Bank has decided to maintain the policy rate at 11% for the third consecutive meeting. This decision highlights the State Bank's cautious approach, particularly in light of the recent floods. Encouragingly, the economy is on a much stronger footing compared to the 2022 episode, supported by a more favorable global backdrop. This should enhance the ability to better absorb the current shock. Economic activity continues to recover as evidenced by high-frequency indicators and an improved distribution of LSM growth. However, we feel that the State Bank's stance remains appropriate to allow the lagged effects of earlier easing to take hold. On the inflation front, we align with the central bank's view that the flood-driven rise in food inflation is transitory. Perishable items have a shorter cycle, and post-flood improvements in soil fertility are expected to enhance yields in the coming harvests. This should help to ease price pressures. Nevertheless, the floods are still expected to adversely impact the current account. Imports of key commodities, particularly cotton, are projected to rise, while rice and other agricultural exports face headwinds. On the other hand, remittances continue to be a bright spot for Pakistan, expected above $40 billion for the year, while soft global commodity prices will somewhat temper import growth. Given these dynamics, we believe the current account deficit will fall towards the higher side of State Bank's range of 0 to 1% of GDP. In terms of debt repayment, Pakistan faces a net repayment obligation of $10 billion in fiscal year 26 after accounting for expected rollovers. Of these, $1.5 billion has already been settled, leaving a balance of $8.5 billion. This includes 2 Eurobond payments with $500 million due later this month. The State Bank Governor has confirmed that arrangements are in place and this payment will not materially impact FX reserves. Looking ahead, we expect the State Bank to maintain its prudent stance with inflation projected to exceed target levels in the second half of fiscal year 26 before easing in 27. While the full impact of floods remains somewhat uncertain. Thank you for listening in, and we'll see you next time.